What does Stanley Druckenmiller's inflation warning mean for crypto? One of history's biggest forex traders claims cryptocurrencies are the most likely global reserve currency to replace the dollar. Forex and hedge fund tycoon. According to Stanley Druckenmiller, new Federal Reserve strategy and U.S. deficit spending are putting the U.S. dollar on a path to failure. He told CNBC's Joe Kernan this morning that the US dollar is more likely than not going to lose its position as the world's reserve currency over the next 15 years. Druckenmiller's remarks centered on the Fed's contribution to low interest rates and US debt bond buybacks, actions that would eventually help US deficit spending on coronavirus pandemic relief. Druckenmiller's remarks, on the other hand, were encouraging for one party that is now practically shorting the dollar: cryptocurrency supporters. With the euro a basket case and the Chinese Communist Party-backed yuan also regarded with mistrust, Druckenmiller sees no other fiat currency replacing the dollar as a universal mediator anytime soon. Instead, he believes that a crypto-derived ledger system is the most probable replacement for the currency. This is a stunning collection of comments from Druckenmiller, who is widely regarded as the best foreign exchange trader of all time. Among other major trades, he was the architect of George Soros' famed shorting of the British pound in 1992. Now he's repeating one of the most fundamental talking points of Bitcoin supporters, who have for a decade compared the orange coin's immutably set issuance with states' proclivity to let the money printer go burr. For decades, inflation has not been a significant concern for the US economy. In particular, prior to the pandemic, the Fed viewed inflation as too poor for nearly a decade. However, pandemic borrowing has driven the US deficit and debt to all-time highs, raising widespread fears about the possibility of inflation. Inflation can be a big problem for dollar-denominated holders because it eats away at their holdings and gains. That may also be inconvenient for employers and customers, as salaries appear to rise in tandem with inflation. If the dollar loses its appeal as a weapon for foreign governments and multinational traders, the loss of its position as a global reserve currency will be disastrous for almost anyone in the United States. According to the International Monetary Fund, between 40% and 72% of all US banknotes are estimated to be kept overseas, and dollars account for more than 60% of global national foreign exchange reserves. If trust erodes, attempts to sell such positions could set off a brutal downward spiral in the valuation of the dollar, with a slew of negative consequences at home. Despite strong longer-term trends in US debt, it is far from clear that now is the time to cut back on investment. Druckenmiller contends that the current recovery in the United States is so high that further pandemic relief spending is needless and perhaps dangerous, but relief spending seems to have been critical in establishing the recovery in the first place. Indeed, some say that the United States' reaction helped it win the pandemic by compensating for broad drops in production. Some argue that pandemic relief prevented economic disruption comparable to the Great Depression, which may have harmed the dollar's foreign reputation as much as modest inflation, if not more. Druckenmiller's reserve currency endgame scenario explains how irresponsible government spending hurts everyone in the long run. Druckenmiller does not deny the value of relief investment, but also argues that it is time to scale back. It's a broadly Keynesian argument: increase the deficit when the private sector is down, and reduce it as the economy as a whole recovers. It's also arguably Monday morning quarterbacking, because existing relief efforts, some of which are set to run another 6 months, were in the works before the completion of the US vaccine rollout was guaranteed. Its current merits are still debatable, The US real unemployment rate, U6, remains above 10%, implying that there is still plenty of slack in the overall economy. That is only one of the significant differences in what inflation entails at various income levels. As previously said, it is usually consumers and the rich who stand to suffer the most from inflation, which chips away at dollar-denominated returns while further diluting the worth of dollars retained. Meanwhile, employers, who are least likely to have substantial savings or pensions, have reaped the largest relative gain from pandemic relief expenditure and would bear the brunt of the consequences when it ends. Druckenmiller's reserve currency endgame scenario demonstrates one way that irresponsible government expenditure inevitably harms everybody, but in the short term, pandemic relief has rendered a lot of ordinary people's lives significantly easier than they might otherwise been. This is almost never acknowledged in wider analyses of inflation, although it is apparent when existing inflation concerns are contrasted with reactions to then-President Donald Trump's 2017 tax cut plan. The Congressional Budget Office predicted that the cuts, which overwhelmingly favored the wealthy, would add $1.9 trillion to the debt over 10 years, even after allowing for the additional inflation spurred by the cuts. That is the same size of the budget void caused by President Joe Biden's American Rescue Plan, but there was hardly a peep about inflation after those tax cuts. This is much more surprising given that the cuts occurred during a time of economic strength, making them politically unsustainable and much more likely to spark inflation than savings during a recession. Perhaps more perplexing, many of the same people who are concerned over pandemic inflation are still resistant to Biden's efforts to partly overturn Trump's tax cuts. All of this leads to bigger issues that might arise for any international reserve currency, crypto-derived or not. While inflation is understandably feared, deficit spending is an effective tool for nation-states to fulfill local political and social needs, especially when it comes to protecting society's most vulnerable members during crises. Under the worst-case situation, a foreign currency that completely replaces national currencies will restrict a national government's fiscal discretion to take such decisions. This can be seen in the difficulties that countries such as Spain and Greece have faced since abandoning their own currencies in order to use the euro. However, for nations that still have viable national currencies, a supranational reserve currency could be more moderating than constraining, especially if it is open to the general public. If your own currency is being mismanaged, your only choices right now are to search for other countries that are doing a decent job or to buy gold. A neutral, anti-inflationary reserve sheet, on the other hand, might be a much safer shelter. If it was simple to buy and keep currency, for example, through a public blockchain, mistrust in a government's monetary policy will be swiftly punished by dropping currency demand. Meanwhile, states would retain the ability to issue debt in their own currency when it was genuinely necessary and accepted by popular opinion. However, it is difficult to find a way forwards that would not cause significant uncertainty for the currency in the United States as a whole. After all, the $1.9 trillion in pandemic borrowing was applied to an already massive amount of federal debt, bringing the amount to more than $28 trillion. If waning confidence in the dollar turns into less global demand for keeping the debt, rising interest rates, according to Druckenmiller, could entail as much as 1/3 of the US annual budget to be paid out in interest alone, up from approximately 10% now. It would be terrible for almost all. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.